traders, I'm Mike from GYLD and I welcome you to another market review which is posted every Sunday. Now before we get to the charts and the analysis for the upcoming week, I would like to tell you about a promotion that we are currently running. So with us, you can get funded all the way up to $400,000 account in a single challenge, and we're currently running a promotion which allows you to get 20% discount by using the code GYLD20. Thank you very much, and let's get right to the charts. Starting with the dollar index as usual. So we can see that the dollar index is finally giving us that nice pullback that we have been expecting, and we're currently reaching some interesting areas of support which could very well give us some opportunity to buy next week. So the dollar index is something to look out for. This zone we need to see some reaction. NFP drove the price lower, as you can see, and we wicked closing back above this level of support, so that is a very good sign if we are to go higher. So it's important to see how the market opens on Monday, how the price action follows up on the NFP after the release. That was on Friday last week, and this could potentially be very good for the dollars, but we will have to see. Taking a look at the euro dollar, similar story, once again correlated pairs. We can see that we pulled back into these zones of resistance, which was the level of support on the dollar index, right? And we also rejected part of it, so we kind of just went up to spike previous highs over here on the lower time frame, and we're closing back around those previous highs on a lower time frame. So the euro dollar looks absolutely beautiful for potential shorts in the upcoming week. Looking at the 4-hour, there is nothing really, there's nothing really interesting on the 4-hour as of right now, so we would have to wait for something to develop. But overall, the higher time frame bias is bearish, clearly. So looking at the pound dollar, very much the same. Once again, we can see that we also pulled back into these zones of resistance, and we wicked it, and we closed back below these highs on the lower time frame as well. So pound dollar would also be excellent for shorts in the upcoming week, with some of the levels of potential targets being here from a higher time frame perspective. So this is more of a swing trade target, but overall this should be good for intraday price action shorts as well, if price action does provide some opportunities for you. So the dollars are looking very good for the upcoming week. Moving on to gold now, we can see that the gold has respected the level we marked out last week in the previous session, and we're not really moving anywhere as of right now. We're kind of just consolidating, slowing down. So with gold, it's important to see what happens next. We could very well go both sides, both directions could be taken out. So as of right now, I don't see anything clear indicating clear buys or shorts. So right now it's a pullback developing, potentially a reversal, but I'm leaning more towards pullback. Obviously, we're not trying to catch the tops. So overall, we would like to buy gold, but as of right now, it still needs more pullback, and we need to see some momentum coming back in the market. Okay, taking a look at Bitcoin, this still hasn't really left the higher time frame consolidation around the all-time highs, so not much happening on Bitcoin. So, we broke out of this consolidation, we broke out of, but we came right back in. So this is just taking out both sides of the range possibly, so we could very well reach for the highs, for the previous highs, and until we're just stuck in this consolidation, or we're just wicking the bottoms or the tops, it's a range trading time. And for those of you who do trade ranges, obviously you would like to buy around the bottom, especially after a spike like this. But other than that, there's nothing going on Bitcoin as of right now, but it could very well change in the upcoming days. So keep an eye out on the Bitcoin. All right. Next up, we have the US 500 or the S&P 500. And we can see that it's pulling back, it's coming back up into these levels of resistance. So it will be important to watch how price reacts over here, because as of right now, it's kind of stuck between two zones. Some of these bullish zones, you know, where price is expected to be bullish, and we're below this zone of resistance. So we're kind of between two zones on a higher time frame, and we could see we could go both directions. Either direction is possible, and as of right now, there's not one-sided clear bias in my opinion. Okay, so watch out these zones in the upcoming week. They will absolutely be important, you know, especially since we're taking out some of these highs on a lower time frame and we're coming back into the levels of resistance. It will be important to see the reaction, and ideally, if this is to go lower, we would need to see some sort of rollover on maybe the 4-hour or the hourly time frame, which could give us an opportunity to go lower, right? So last but not least, we have the NASDAQ or the US 100. And with NASDAQ, it's a similar story. We're also pulling back into some of these levels of resistance. So once again, watch out for the reaction. You know, there's a nice last up closed candle before they move down here. So that's an important level to watch out for. And yeah, we have to see. Once again, this is not a one-sided clear-cut price action, because, you know, on one hand we have this nice impulsive move down followed by a pullback, but if we zoom out, we're on a massive uptrend from a higher time frame perspective, right? So it's very early to catch the tops. So as of right now, we just have to follow the lower time frame momentum and the order flow and determine where it's more likely to go on a given time frame, right? But one thing I don't like about the NASDAQ is that we closed back within this consolidation. So that is something I'm a little bit worried about, but overall it's not looking too bad, but we need more information. All right, so that is it for the charts, guys, and I'll see you with the economic calendar. All right, guys, and finishing up this session with the economic calendar, we expect this week to be pretty much headed towards British pound and the US dollar, as there will be some heavy news for those two currencies later in the week. So let's start with Monday. So Monday is generally a slower day, as it's the beginning of the week, and we also have Japanese and the United Kingdom bank holiday on top of that. So Monday we should not be expecting anything really. It should be slow Asian and London session, and also New York, given that there are no high impact news. However, we have had the NFP release last Friday, so we could price action could follow up on that. So everything is possible, but we do not expect much on Monday. Okay. Next we have Tuesday. On Tuesday we have a lot of medium impact news. Now this is nothing major, but this could provide you with some intraday price action and some opportunity for trading, as we have quite a bit of news for all the major pairs, or most of them actually. Okay, on Wednesday we have the crude oil inventories for the New York session. Before that we don't really have anything major. We have some medium impact news, but that's not the most important news. However, for the New York session, as I mentioned, we have the crude oil inventories, which is going to affect the oil and the Canadian dollar, as Canada is a big oil exporter. So that's something to watch out for if you're trading oil or the CAD pairs. And we also have the 10-year note auction for the US dollar. All right, and on Thursday, this is where most of the action is going to come in, presumably, as we have the Bank of England interest rate decision, and the interest rate is expected to stay the same, unchanged. So let's wait and see. And then for the New York session, we have initial jobless claims for the US dollar, which is absolutely going to move the market quite a bit, and it should provide some opportunity for you. So best luck with that. We also have the 30-year bond auction on Thursday, as pretty much the last big news on Thursday. So Thursday is definitely going to be backed with action, And moving on to Friday, we have the gross domestic product, the GDP for the British pound in the London session. So that should absolutely move the market as well, as we will be following up on the interest rate decision from the previous day. And other than that, we have some unemployment rate and we have some medium impact news once again, but the GDP is going to be the main focus for Friday, I believe. And with that being said, guys, I hope you enjoyed this. I hope you found this helpful. If you did, we would appreciate any kind of feedback. Even if you didn't find this helpful, we would appreciate all feedback. So write your comment down below and make sure to follow us for more content like this. And I'll see you next week. Cheers.